Okay, hello traders and welcome to our 7-part video series on the 7 steps for strategy construction. Today is going to be part 2 out of 7, and today we're going to be exploring which strategy and CO. So this and more in this trading video series. Hi traders, thank you for joining the Master the Markets team in our 7-part video series on strategy construction and joining us in our mission to spread the truth of trading and help you achieve consistent trading performance. It is Tune Upon here, founder of Master the Markets Illustrious Conference in the Traders Open Day. So here we are traders on step 2. Which strategy and CO? Now let me just go on to the charts very quickly onto the trading view chart. And let's take a look on what's actually happening. I mean, remember that every Monday we update our positions, right, on one of the strategies that we do on a more longer term strategy based on a higher time frame and then going on to lower time frames. So on that, we look at about 8, 9 instruments like what you're seeing over here. And then we write down notes. Remember, like the Bitcoin, looking for top and the bottom to confirm and all of that. Now, some of you have messaged us, emailed us, and asked us, Tiru and the Master Markets team, I mean, how are you guys doing this? What are your principles for the strategy construction? What is the whole ideology? And then that's where we got the idea of doing it and showing this to you guys and putting this video series on the 7 steps to strategy construction. Now, if you have been following us, we also released the previous one as well on our Master the Markets channel. If you can see Master the Markets 2010, let me just show you over here. Is it over here? Let me just check that. That was from before, wasn't it? Let me just see. Yep, there you go. So Master the Markets 2010 is the channel. You can start following us there. And over there under streams, we released the previous one on 7 steps to achieve consistent trading performance. Okay. So now is the 7 steps for strategy construction, and today we are in part 2. So you should highly recommend for you guys to take a look at part 1 as well if you haven't taken a look at that. All right. So now let me just go back to here. And I'll just quickly type into the chat box as well, that just telling people if you got any questions, just ask us. Just hi everyone. Just feel free to ask any questions if you may have. Okay, let me just do that very quickly. Right, so I've just told that. Now let's swiftly go back to here.
If you're enjoying this video, go ahead and smash that like icon. If you haven't joined our channel yet, click on the subscribe button and hit the bell icon so that you get notifications immediately when we post up quality content like this, and especially to get our live trading updates sent directly to your phone.
On to step 2 with strategy and CO. Now, let's take a look. Now, the first thing that you want to be asking whenever you're taking a look at any strategy, for example, on CO and which strategy, I just want to give an analogous example to building a car, which is what we used in part 1, remember? So the first thing you got to ask yourself before you even start to choose the tools to build the car, traders, the question to ask is, what type of car do I want to build, right? Is it going to be gas or going to be an electric car? Okay. I mean, further questions you can ask from that as well. Is it going to be a family car or is it going to be a sports car? Now, how do you answer that, right? You can only answer that in the car example with the target audience in mind, right? Who are you building this car for? The target audience, is it not? Now, with the target audience, but how do you choose your target audience? Now, if you're doing a business out of constructing this car company or constructing this car and wanting to build a car business, the main thing you got to ask yourself is, what is my main target audience I'm selling to? If 80% of my target audience in that geographical location is going to be sports raving fans, okay, sports raving fans, then what am I going to do, right? So, firstly, Immediately I can answer. So I definitely need a gas car because at the moment gas cars the pickup is much more faster, right? So for sports, and also then is it going to be for? It's not going to be for family. So I definitely don't need a medium engine. So in terms of choosing the engine, it's got to be a turbo engine, right? Turbo engine. So I got to really choose really fast. Powered engines. How is the brake going to be? Of course, it's definitely going to be manual, right? Because with manual, then you can also got more control over the car, much more faster, much more pickup, especially in sports racing scenarios might change in the future. So you see, traders, once you've locked in for what target audience, what's the end outcome you're going to be looking at, then the tools that you choose also changes. Now we covered all this in part one, right? And therefore, in a strategy, we always got to start off with the end outcome. What are we? How do we want that strategy to look like? What? How do I want my profits to accumulate? Right? How is my drawdowns going to be looking at? So that's why we have to start looking at what I've mentioned over here. Which strategy? Start with that question first. Okay, which strategy do I want? How will my strategy look like? That's why I've put two types of diagrams here. Do you like strategy one or strategy two? Okay, so let's take a look at that. Let's go a bit more deeper because this is important before you start choosing the tools, start choosing the parameters to build your strategy, which you're going to be looking at in all these next video parts of the strategy construction video series. So let me bring this up. So I've got this one here. So I just want to ask you guys this question here. Okay, I'm going to show you some data, and then you guys going to discuss then. Okay, which one would you then prefer? So all this, remember, this is how we are inspired to get all these results for 2022. We publishing results is 2021. You can see every single trade logged in transparently, and then we share this with all our paid members. I'll go through this later on as well. But coming back to here into this, now you guys type it in, or later on you can reflect on this as well. Which strategy would you prefer? Strategy one, where generally you're taking the same number of trades in both strategies, but the number of winning trades is much more higher, is 70% in strategy 1. The average profit is about 115. So altogether you make about 8050 total gross profit. Now total losing trades, 30% of them lose, but the average loss is much bigger. It's 200 pips, right? 200 points, whatever you may call it, depending on the instrument. So it's a little bit 1.5 times more, right? Your profit 1.7 times more. Total gross loss eventually is 6,000. You end up with a net profit of 2,050. So in essence, it's higher reliable, but the drawdown is more. Okay, average loss is much more. In strategy 2, the winning trades is only 50, so it's 50%, 50-50. Average profit is 100, total gross profit is 5,000, but the losing trades are only, average loss is about 60. It's about almost about half of the profit. The total gross loss is much lesser than your strategy one. In the end, you end up with the same net profit. Okay. Then, if you were to go in a bit deeper on the numbers in strategy one, you can see the losses are a bit more bigger, right? Whereas the losses are much more smaller here. Okay. And eventually, if I were to put that into terms of an equity curve, which is over here, you can see that it dips down. Strategy one dips down because the losses are much more bigger. Two winning trades and it dips down, and then it takes until trade number 10 to go above your trade number 9 to go above your account balance, initial capital. But whereas in strategy number 2, right, by trade number, you see, for example, it doesn't really actually even go below your negative, below your initial account capital, right? So it went to 200, came back down, and then by trade 7, it's taken a new peak. It's taken out that peak, and then off it goes. right? So understanding all of this, and in essence, coming down to this thing of higher reliability or more drawdown and taking more time to come back to above your initial capital, or 50% reliability and drawdown being lesser and taking less time to go above your initial capital, or not even going down below your initial capital, what strategy would you prefer? In fact, in one of our workshops when we did this, asked this question on Traders Basecamp actually package, and then one of the clients said, "Oh, this is a very very tough question, and I've been trading for 10 years and I still haven't thought about this." So this is very critical, traders. Yeah, start with the end objective in mind, and then you start building the tools up to meet that objective. So tell me, so punch it in. Tell me, what strategy would you prefer? Okay. So some of you might be typing in, some of you are already messaging me this as well and emailing. I can see some emails popping in as well. So let's see.
For those of you who are unsure of any of the terminology or the concepts in this video, watch our free Trader Starter Pack 5-day video course as shown in Empire Cinema. It is educational, entertaining, and covers basics and advanced content with cross-transferable principles for trading and investments. It pertains to both beginners and intermediate traders, all dedicated towards helping you achieve consistent performance. Go ahead and register for it on the link below.
Some of you what you all may be thinking about. And there's no right or wrong answer. So just type it in and ask yourself, which strategy would you prefer? Okay. Some of you saying strategy one, some of you saying strategy, some of you saying I don't know. Now, at least this has started your thinking off already now, yeah, in terms of thinking about the end objective. Now, once you got your end objective, okay, traders, then the next question in relation to that is the CO. The CO in relation to this. The CO in relation to this. Now, what is the CO? After you got your end objective, what type of strategy you want to build, what type of car you want to build, then you start to align the CO in relation to the strategy or the car that you want to build. Okay, right. So if I say that I want to build strategy number 2 because I want lesser drawdowns, then what does the CO look like? Now, what is the CO? And in fact, I just want to let you all know as well, most of these principles are covered in our 5-day video course in much more detail at traderstarterpack.com as well. Okay, highly recommend you guys to watch that. Now, so the CO, the first thing is what we call the concept. The C stands for the concept. What is the concept of the strategy going to be? What is the concept of the strategy going to be? The concept is usually based on something that keeps recurring in the market, recurring. So a recurring principle that keeps recurring in the market. Some recurring principles can be turning points in the market, right? Turning points will keep reoccurring, is it not, traders? Yeah, because the market will never move in a straight line, so therefore it's got to keep making its turning points, is it not, traders? So when you take a look over here, if you go on to the trading charts, you can take a look at that. Even if you take a look at any of them, or gold or whatsoever it may be, you can see, right? This is one thing that's very unique about us. We've quantified what the turning point is, isn't it? The bottom and the tops. So you can see over here. Yeah. So that's what we are looking over here. Is it not? That it's there's turning points. They keep recurring in the market because they will never go straight in a line. We have just quantified those turning points as I've talked about in our 7 steps to consistent trading performance. So then we come back. The next type of recurring principle that you can build a strategy on is bar ranges. You see, the range of a bar will always form, is it not, traders? Yeah. If you look, you see there's always a range between the high and the low in individual bars, and you can use this concept and principle that's recurring in the market for an intraday strategy also. Right? So we can construct on that. So you need a concept that is a recurring principle in the market. That's how you start off. And you use that in relation with your end objective of what strategy you prefer. And you use the concept that can meet with your end objective. Okay? So one is that if it doesn't form ranges, you see, think about this. If it doesn't form ranges every day, if the bar range doesn't form behind the low, what do you have? You have a straight line. It's like a flat ECG, isn't it? The guy is dead, right? And why would you want to be trading such an instrument? You want to be trading instruments where there's good volatility, good bar ranges, and you want to trade that to your advantage, right? So that is what is the meaning of a concept, a recurring principle that keeps occurring again and again. Another one is Another concept that keeps occurring is what? Stops get taken out, and after the stops get taken out, continuation occurs. So, for example, trade goes up, and then what happens? And then it comes down, people get frantic, stops are all taken out. After that, then it continues. So, based on that, also you can construct a strategy. Okay, so you can see that based on an end objective, you choose the concept that matches alignment with that. Okay, now what is the next thing? Now, again, as I said, it's all mentioned at traderstarterpack.com. You can definitely take a look at that as well. The concept, for example, you can develop a swing strategy and enter at the turning point of the cycle. So, for example, I've always mentioned this as well with using the smart money indicator that we've designed. Whenever the bottom is confirmed, you can look and select to see if you want to get in an entry on that point. Selection, right? Based on your concept and O, right, which I'm going to be covering on your CO. Right. So now that is established, you can start to understand where I'm going ahead. Now we go on to the O of the CO. What is that O? Some of you are asking already, right? So that O, traders, is called the objective. After you've established a concept of your strategy, what is the objective? What are you looking to capture? How much of the move are you looking to capture? Okay, so that's why I'm saying, what is the objective of your strategy? And to capture how much of the move. And you align this objective along with your end outcome on how your strategy needs to look like. Remember, what strategy would you prefer? Is it not, traders, right? So that's how you look at it, right? So, for example, in a swing move, right, you want to be capturing. Let's say you just want to capture only phase one trend following strategies, phase one of a cycle, only in alignment with the trend, not the twos, not the phase twos counter trend. Then one key thing you can look at is capture 70% of the phase one move. From here, from the bottom to the top, capture 70% of the move. 70% of the move. That's what you should be looking at. Okay? Right? That's what we should be looking at. So that is the objective. So you see how we looked at all of these things and align them together. Now, this is how we have actually put our strategies together in our journal and everything, and we have achieved. You see, all this, every single trade is logged. Don't care whether it's profit or loss, every single trade is logged, and we trade transparently in front of all our paid members. Now, all our end of day trades, and that's how in 2022 we got 73.34% net profit based on these three strategies, right? That's how we got it, yeah? Now, if you can see, in 2023, though, this year, it's not been that easy in terms of it's not been a smooth ride as in 2022. You can see that, you know what, everything is all profitable every single month, and then you end up with that, right? Especially only in November and December, then we had the biggest drawdown months. So, when you take a look at in terms of this 2023 over here, you can see that the first few months, if you take a look, right, the first month was profitable, next month was negative, and then March, and then after that, April, May was negative as well. So, in fact, if you look at the cumulative, if you take a look at these traders, we were actually negative for a good 4-5 months, were we not? After the first month being positive. So, if you take a look at the curve, it will it will look something like this, right? So let me just do that. So if I got my 0 point, so it took off 4.29, right? 4.29, and then it then dropped to 4.65 minus, right? It's cumulative I'm taking a look at, right? Based on all these three strategies, 20% OUTSL primary and 1 day exit, which is all recorded in each of the tabs over here. Every single trade transparently, right? Now let me just bring that back. Okay, yeah, everything transparently. So you can see one day exit, every single trade you're logged in, all the wins, all the profits, and same thing over here, right? No hiding. Okay, so you can see that 4.65, then it bounced back up a bit, minus 1.95, then minus 7.48, and then going down more further, minus 11.55. This is where it got to, and then it shot up more to minus 4.24, right? Taking out this drawdown point over here, minus 4.24. Then in July, then it shoots up to 8.83%, okay? Taking out its last peak over here. That's how the curve looks like on these three strategies on one of our trading rooms. Okay, so you see, traders, once you understand these principles that we're talking about, you'll have the conviction to trade past the drawdowns and get to positive points. Look at June and July, monster month, 7.31 and 13.07. This is what keeps us giving the conviction to go in front of people, keep trading in front of them, and taking it out of the drawdowns. Okay, and this is also what keeps us giving the conviction. Like if you take a look even at the trades over here, we take it in front of you, right? So even this one's here, we just say it in front of you where we're looking at, where we're looking to enter, and then we record down all our um, wins and profits. Okay, so over here, if you take a look, you see 171 over here, and we're starting to record this every single thing in transparent time because we really are passionate about spreading the truth out there in this industry and helping you achieve consistent performance. You can see, but then on the Brent oil, how much we lost over here, and then on Dow Jones as well. We're recording all this in real time, so you can follow us also on our channel, as I've said before, Traders Master the Markets 2010 over here, and you can start to see when we are publishing in terms of the ideas, all these things in live, okay, and how we are recording all the trades, how many closed. You see, you can see all the updates over here as well, right? So you can see, let me just pause that. You can see everything is all transparent. Now all that, why am I showing that all to you? Just to tell you and summarize that this is what gives us the conviction, because we know what is our end outcome, what type of strategy we want to create, and based on that we choose the CO and align that to our strategy and outcome. Okay, which is what I talked about in all this videos, part 2, right, in this video. Now on the next part, we're going to be looking and delving more further into the actual tools on how we build that strategy together. There's going to be altogether the 5 components which I'm going to be talking about in the next part of this video series. Okay, traders, yeah. So I believe that's a little bit, quite a bit of content for you guys to take in, reflect on it. The recording will be there. Keep rewatching it and putting it all together. We started to do this because of the inspiration that a lot of our clients said, you know what, Tiru, no one out there is talking about strategy construction. You just go straight away into strategy. You just say, okay, trade this, trade that, and then you're looking to just sell this and sell that, right? So what we then decided to do is publish this video series so they can help you towards strategy construction and towards eventually end outcome of building sustainable, scalable, and reproducible strategy. Okay, traders? And of course, if you want to learn more about this and all of that, you can go to our free 5-day video course over here. As I said, traderstarterpack.com in our channel, Master the Markets 2010. Okay, that brings me to the conclusion point over here today. And yeah, thanks for those of guys who already responded. Yes, Robert, thanks a lot for that. You're saying strategy 2, right? Everybody likes more lesser drawdowns, is it not? So understanding that, then you align your strategy, you see, as I mentioned. I guess that's pretty much that from me, traders. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.
If you want to get notified every time we put a video up, especially on our live trading update videos, hit the subscribe button and turn on the bell notifications icon. This will get the YouTube algos to kick in and for you to join us in our mission to spread the truth of trading further, so that traders like you can benefit from our videos to trade like a master, achieve consistent performance, and change lives.